Investing Mastery Series. It has been going awesome, and in the last video, we completed ratio analysis completely. Right? We talked about profitability ratios, we talked about liquidity ratios, capital structure ratios, and last but very important ratio that we discussed was P ratio. In this particular video, I'll walk you through a platform which will help you at the very first end. मतलब अगर आपको एक basic analysis करना है, सीखना है, this platform is going to help you. I will teach you about how to create your own screeners, how to use all these ratios. In fact, how to use all these ratios in an advanced way. This is what we're going to learn in this particular video. So, let's get started. So, this is an absolute free platform called Scanex, scanex.trade, which is developed by Dhan. If you have an account in Dhan, you can use this platform, you can use this screener for free for lifetime. And the best part is you can have the one-click execution as well. Of course, we are going to use screener in the time to come, but this is first fundamental thing that you can get started. So what I would like to request you guys is, if you don't have account in Dhan, you can go in the description, open the account, give a link given in the description, so that you can learn and explore whatever I'm teaching you. Okay, I'm going to teach about how to uh, use the ratios in a much advanced way. We're going to talk about all these things throughout the video. But to execute that, you need a Dhan account. It's a free product, right? Account opening is free, maintenance is lifetime free. You get trading view integration lifetime free. You get one-click execution lifetime free. So you got amazing bonuses. Just go click on the link below, complete your KYC, and that's it. So once your Dhan account is done, you can come to the scanex.trade, and here there are some fundamental screeners which are go to the fifth tab, which is called screeners. And here they've already built in some screeners ready-made, like results. Results and all these things we have not yet covered. But for example, I open this called potential multi-bagger. So market cap divided by sales is less than 1. Capitalization is between 100 to 10,000 crores. So we are only looking at companies which are having a market cap of minimum 1,000 crore. Net income is greater than 0. So we are looking at the profitable company. P divided by sector P. So this screener I have opened just to explain you the importance of this. That P ratio is gonna play a very vital role in your decision making. So here if you see P divided by sector P. So if a sector P like bank, say for example sector P is 10, but my bank, for example IDFC Bank, for example IRBA Bank, for example Bandhan Bank, these are just examples. If it has got a P of 7.5, so this ratio will catch that P divided by sector P. That means potentially we are looking at an undervalued stock. And the last over here is EPS growth is more than 0. So there is a growth in EPS. I'm not saying EPS greater than 0. I'm saying EPS growth is 0. Okay. So you'll get some beautiful companies. Of course, you need to do the fundamental analysis. And if you want to add some more screeners, you can go over here, say customize, and you can do that. But now what I'm going to teach you is, I'll go to create. We will create a new screener, fresh screener, right from very beginning, based on the concepts that we have learned. Okay, based on the we've learned. So my dear, if you recall the ratio analysis, we talked about GP ratio, NP ratio, we talked about operating profit ratio, and then we said that, man, okay, understand, these ratios are good, but what really matters as an investor for you is the return that you get on your capital, right? I gave you example, if you can recall, that one company was having a sales of 100 crore, profit of 30 crore, that is 30%, very good, so far so good. But to generate that sales of 100 crore, that capital is used, that the capital the company has used was, for example, 1 lakh crore. So this company is something that is never going to make sense to me, because okay, on sales I'm getting 30%, but on my capital I'm getting meager 0.003%. And that's where, if you can recall, we also understood turnover ratios and wherein we try to understand how much sales we are trying to generate on the capital employed. So if we start from the capital employed, or if you start with the profitability ratio, here I go to the add filter. Here there is a tab called financial ratios, and here if you see all this, there is a P ratio, there is a PB ratio, there is price to book ratio, current ratio, debt to equity ratio. So this is an important ratio for me. For example, I'll go to the debt to equity ratio, and what I'm going to do is I want a debt to equity ratio of less than 20%. Okay, so if it is less than 20%, that means typically I'm looking at a company with lesser debt. If you want a stricter condition, you can say over here 10. So typically I'm looking at those companies which has lesser debt compared to its equity. So that's the use of debt, and we actually practically use it. What point I'm trying to dive home is whatever lesson that was taught to you during the ratio analysis are still relevant, are still making sense. Okay, so debt to equity ratio. I'll again go to the add filter, and here there is the income statement ratios like NP ratio, capital ratio, and all that. So you got all these ratios: dividend yield, dividend per share, EPS, and all that. So if you want to say anything like, for example, I select EPS, I say apply, and now I'm going to teach you something advanced. So if you go inside EPS, there is something called as advanced. So we can say that EPS is more than industry EPS. So you will easily get that these companies are just standing out. But these ratios are not, might be one company may be having a share of face value 10, one company might be having a face value of 100. So this may not be a proper ratio. So what I'm going to do is, I'll go to add filters. I'll go to this performance and growth. I'll check this performance and growth. And here I get return on equity, return on assets, return on capital employed. So I'll say this return on capital employed. And I want only those companies where return on capital employed is minimum 15%. Sorry, I'm not able to type it. Why am I not able to do that? Just give me a moment. My num lock was closed. Okay. So here if I apply the screener, see my number of companies that are coming into my list are getting reduced. Now, these are the two conditions: debt equity ratio less than 10%, return on capital employed greater than 15%. What else do you want? Again, I'll go to the performance and growth, and I can say that there are so many, here the beauty is you can see the growth ratios as well. So if I say, for example, ROCE growth percentage, time frame, yearly, quarterly, you can do whatever. Like here, the beauty is you can select even 5 years. If I apply this, that ROCE growth rate over the past 5 years is greater than, for example, 10%. See, my companies are getting filtered out. Now I'm left with those companies where there is a ROCE growth. Add filter. Now, my point over here is if you keep exploring this, there is a financial ratio, there are income statement ratios like dividend yield, PBT, and all that. There are balance sheet and cash flows. So if you want anything like this, you can get it. Here there is the industry and sector, industry EPS, industry debt to equity ratio, industry PE ratio, industry PB ratio. So that was the ratio that we were seeing there. That if our company's PE ratio or industry PE ratio is more than P ratio, that means our company is an undervalued company. So look at this. From 491, the list of companies that is in my radar has come down to even 286. Okay. My point over here is I want to give a lot of homework to you because this is a platform that you will come to know once you explore. If you want only Nifty 50 stocks, say for example, you can go over here, say index. You can go to the index. You can say apply, and the index that you want to look at is, let's say, Nifty 50. So I'll get only those stocks which are forming a part of Nifty 50, and from 950 or 286, the number of stocks that are in my radar has come down to 13. So you can explore this. Whatever you have learned in my previous videos, you can easily apply it over here. You can, and what one more thing I would like to do you to do is, every time when you are putting a filter, just go to advanced. Like for example, I'm going over here the filter of debt to equity ratio. Here there is nothing called advanced, but wherever there is advanced formula, like over here, you should definitely look that. You should definitely look that. Okay. So again, you go to add filter, there are price and volumes. These are something that we're going to use when we learn the technical analysis. We are still warming up. I'm not even telling you to buy any stock. These are just the things that you should know, that you should learn, and that you should know how to explore it. Okay. So here, there are so many things that you can explore, like current asset, current liabilities, total equity, total inventory, reserve surplus, book value, financing cash flows, operating cash flows. यहाँ पे सारे cash flow ratios भी है. So what you can do is, for example, I select operating cash flow, and what I want to say is that operating cash flow should be at least positive. I don't want companies with a negative cash inflow, cash operating inflow. So I'll select over here 0, and I'll get a list of only those companies which are having a positive cash inflow. And of course, all the companies that are in the list are having the positive cash operating inflow. So, guys, I'm leaving you with this. This is just a demo. Don't worry about Amit. I did not understand debt equity ratio and all that. You go to past ratios. What I want you guys to do basically from after watching this video is explore this platform, learn how to create advanced features, see how. I'm giving you certain conditions and try to figure it out on your own. For example, I want a company whose sales growth is more than 10%. How will you do that? I want a company whose ROC growth is more than 10%. How will you do that? I want a company which has got a positive EPS. How will you do that? I want companies with a debt equity ratio less than 10%. How will you do that? So try to find out all these conditions. Try to create your own screeners. And definitely we're going to meet in the next videos where we will take the investing journey forward. And I'm sure you're going to learn a lot of things. So do let me know in the comment box, how did you learn? Are you able to execute all this or not? And I'll be replying to your comments individually. Thank you so much.